The story of Zimbabwe's economic and political turmoil is one that is stressed locally and globally. Both Zimbabwe and Venezuela have similar downfalls, which could be credited to unstable systems and leadership, according to Morgan & Co. Research. I'm joined via Skype with Batana Maitzika, the head of research at Morgan & Co., to discuss Zimbabwe's economic outlook for 2020. Batana, thanks so much for your time. Of course, we're having this conversation as the government is looking for help to rebuild the economy from other partners. Looks like the sanctions are really taking its toll. China is busy with its own agendas, and now it's the United Arab Emirates that is a potential source of investments for Zimbabwe. Just talk to us about that within the context of the 2020 outlook for the economy.
I think, as you widely put, I think the country really needs to come up with a plan and also some partners, especially when you then consider the need for international capital to then boost industry within Zimbabwe. But of course, the hindering factor has been the issue around, economic sanctions. I think, it's sort of similar to what Venezuela is facing. We were talking about ZDERA and also the EU sanctions. So really that limits the ability of Zimbabwe really to access international capital and also get things such as credit lines to get industry moving. But of course, what the superpowers have actually put out is to say that Zimbabwe has to work on a number of economic reforms, and once that is done, then the engagement processes will then continue. But as it is, I think the outlook is quite looking gloomy as we speak. Because in terms of numbers, we're looking at GDP growth that's negative. We're looking at something around 12.7%.
And in terms of the research that you have conducted, juxtaposing the economy of Zimbabwe to that of Venezuela, why was it so important for Morgan & Co. to do this analysis, and what is the expected output or achievement of this research?
I think the key question that we asked ourselves was that why is it that a nation in South America that used to be sort of the richest has actually come down in terms of GDP and also a lot of macroeconomic indicators. Then we also asked ourselves, why is an economy like Ethiopia or Rwanda actually doing well? And then we looked at problems to say there could be fundamental problems affecting these countries, and to then find out what has to be done, especially around the political systems and things such as economic sanctions, and also the structures of the economy. So really the results were quite interesting in the sense that you learn a lot, and also it helps policymakers, for example, in Zimbabwe, to then reverse some of the policies that we think are not actually working, and move towards sustainable development.
I mean, what is interesting is I look at Zimbabwe, and I even want to draw parallels with South Africa, because President Emmerson Mnangagwa was appointed at a similar time as our President Cyril Ramaphosa here. Both men came in under the mantra, the mandate of delivering a new dawn to their nations. Both men have so far failed in turning or achieving any significant economic turnaround for their nations. You speak about some policy reversals that could help in this task of economic revival. For Morgan & Co., I mean, what would those be to help President Mnangagwa realize any form of new dawn that he's hoping to achieve under his tenure?
Okay, so the point here is really managing the image that is portrayed outside especially around the political system in Zimbabwe. And one step that you could do that is to then boost or move towards a re-engagement process, because as we speak, what we feel is that there's a lot of political discord, especially among main political actors. Here I'm talking, ZANU-PF and also MDC, to say that if they come up with a resolution, say that let's dialogue, let's work together, and then the image that is portrayed out there, becomes quite positive, and then the international engagement process becomes something that's actually feasible. For example, if you then look at what happened in Zimbabwe, 2009, 2011, I think Zimbabwe actually benefited from a GNU, simply because investors out there felt that it was a positive step, and there was a unit of efforts in terms of policy implementation. But on the ground, I think there are issues that we've seen. For example, the idea of a statutory instrument 142, which has sort of brought about a local currency. We feel that that policy has to be developed in the sense that it's actually hurting businesses from a foreign currency perspective, and also just the investment environment where investors out there are not able really to bring money in and out of Zimbabwe. So these are some of the policies that the government can consider to say, let's divorce one or two things, let's engage, but also attract foreign investors.
Investing on your stock exchange has been a safe haven for many of investors who are trying to keep their capital certainly away from any form of depreciation as a result of the introduction of a new currency or so. Your asset allocation strategy for those wanting to use the ZSC as a safe haven, where would you tell them to park their money to realize decent returns?
So the problem that we cite in the report is that there's a lot of foreign currency issues within the foreign economy and even at the company level. So we feel that investors can actually play in areas where they can actually generate the hard effects. So basically, you're looking into agricultural sectors. Here I'm talking about areas such as tobacco and horticulture, where companies actually export. And we talk of areas such as mining. I think gold prices have actually been looking good, and the prospects in 2020 are actually quite positive. We also have platinum and nickel, but also tourism becomes an interesting play in the sense that it's an area where you could actually be hedged against foreign exchange risks. But all in all, on the ZSC, we feel that there are certain counters that investors can pay. You're definitely looking into Arena Holding. You're looking at Ariston, companies such as Tidco and Tidco International. We also tend to like companies that have ex-Zim exposure, that are in the region, and that have potential to grow their export revenue.
I mean, speaking about the minerals that have done well as a result of a pickup in commodity prices, and also China's economy not doing so badly, and even tourism sectors specifically. Are you seeing any risks further down the curve as a result of the fears of the coronavirus and the impact this could have on the Chinese economy and the consequential impact on mining stocks or tourism-related companies?
Yes, there is definitely a risk, especially for Zim, given that the strategy has been to sort of grow arrivals actually from China and also Asia as well. However, what we've seen is that there's a lot of traffic that also comes from the region, South Africa, Mozambique, Namibia, which tells you that sometimes it's good to diversify instead of just focusing on one market. There's need to boost marketing campaigns and also include certain areas, whether in the region or in other places such as Europe as well.
All right, Batanai, we'll leave it there. Thanks so much for your insights as always. Batanai Matsika, the head of research at Morgan & Co., unpacking the Zimbabwe market developments there.